Hello traders and welcome to another video review. Today is Friday, December 8th, 2023. Let's take a look at the economic calendar for today. As you can see, I got only the most important data scheduled for release for today. Only one had been released overnight. It was the Japanese GDP, which deteriorated to minus 0.7% from 0.9%, so quite big slump here in Japan. Now we got another very important data scheduled already and released. German CPI deteriorated to minus 0.4% from the previous level of 0%, which was in line with the expectations. So that was the very important data released already. What's still ahead of us? Well, we got some data, of course, from the US because it's non-farm payroll Friday. So we got, of course, non-farm payrolls, unemployment rate, and average hourly earnings scheduled for release 2:30. Average hourly earnings are expected to increase from 0.2% to 0.3%. Non-farm payrolls supposed to rise from 150,000 to 180,000, and unemployment rate supposed to stay at the very same level of 3.9%. So any surprise here might be a trigger for a bigger volatility on the market. So let's now start with the euro dollar because it's a key part for today. So the euro dollar 4-hour chart is behaving exactly as we expected and follows the green arrow. We can see the green arrow from yesterday here. We went towards the intraday technical resistance. We broke it a little bit, but we still got the extreme we got still the bearish engulfing pattern here, and now we got the movement to the downside. The bulls bounced from the extremely oversold market conditions on a 4-hour chart. Let me just zoom out because you might not see the RSI. There you go. So we bounced from the extremely oversold market conditions on the 4-hour chart of the euro dollar. However, this bounce was very small, and it's quite the same as the previous bounces. So it looks like all of this movement to the downside has not been finished yet. So if we break below 1.0757 or 1.0748 towards the key, then the next level, to be honest, 1.0696, so the key level of 1.0747 is violated, then unfortunately the bears will be in charge. We continue to be in charge, and the next target is, as I said, below the level of 0.7, 0.699, 0.682. Okay, so it looks like we might have a temporary top on the euro dollar, and all of the bounces higher looks very weak, looks very let's say shallow. So it looks like the bears are still in charge of the market. So this is our arrow for today. It should be red. And remember, let me just zoom out. If there is any breakout lower, then we should see this level here, 1.0695, 1.06. There you go, 1.0697. So let me just move this chart here, and another arrow, of course, is, well, just towards the lower level, yeah, just towards the level of 1.0, basically 1.07, to be honest. So this is how it looks like on the euro dollar. Only let's say that the only thing that could change the outlook is very bad data from the USA, but it doesn't look like it's happening. So we should be prepared for another wave to the downside. We got some data from the Japan, so let's just take a look at the US dollar to Japanese yen, because yesterday we got this big breakout and we continue to slide lower. On a 4-hour chart of the USD to Japanese yen, we got the new local low 141.70, and then there is a big shadow here. There's a big shadow, down shadow. So now the market managed to bounce, and it's testing the technical support turned into the technical resistance 144.41. So now this level is red and it's important level. It's very important level. So we are trading below this level right now, and it doesn't look good for the bulls. We might have some temporary bounce from the extremely oversold market conditions, which is fine. However, it looks like the bulls will not be able to do anything else here. Let's just zoom out to see the bigger picture. Okay, the bigger picture looks like this, and if we okay, so that's the, I can't zoom out anymore. Okay, let's just take a look at the last correction, minus 5.35. Okay, that was the last correction. Can I move it? Yes, I can move it towards here, and well, it looks like this will be bigger for sure. So it looks like this one will be like 7 or something like this. Oh no, I moved the wrong line, but doesn't matter. This one will be, yes, minus 7%, and this one was at the level of 144.40. Yes, because this was this line here was the technical support from here. There you go. We are back now. Everything is everything looks good. So apparently we might see some sort of the market movement very soon. I mean, to the downside. We will continue to move to the downside, because for now it doesn't actually looks like the market wants to go higher, except the fact that we hit the extremely oversold conditions. All right, minus 7% is big time, big thing, basically. Okay, minus 7% is a substantial deterioration, substantial pullback, and it looks like a impulsive wave, to be honest. So maybe this double top we indicated before, I hope you remember, this double top we indicated before turned out to be precisely what we expected from the market to do, and we got the development to the downside. Let's just quickly go to the daily time frame chart so you can see what the scale of this minus 7% movement. If we take the Fibonacci retracement from the last low, okay, the last low is here. After this was 5% correction, okay, so from here to the highs, okay, other way around. Okay, so we need to do it the other way around. So this goes here, and this goes here. Okay, this goes to that high, and this goes to this low, and we deteriorated 61% already. So 61% is 142.95, and we broke below this level. So any new low below this low is very negative for bulls, of course, right? So please stay focused, please stay concentrated, because it looks like we might have another wave to the downside. On the daily time frame chart, trading conditions are again extremely oversold. Nevertheless, it looks like it won't help for it will not help too much for the bulls. The market will not jump that much, maybe to test the 200 periods moving average, and the averages itself, they are getting closer and closer. They are getting closer to be basically to cross. And last but not least, we didn't look at this. We didn't look at this market for quite some time. US dollar index. Ahead of the non-farm payrolls release, the US dollar index managed to deteriorate a little bit. So if we take the this high and this low, we can see straight on that 61% was basically hit, and you have it here on this level. So we retraced 61%. Now we are trying to bounce. However, this bounce doesn't actually look very strong. The market participants cannot break even above the level of 50, so there will be some sort of the technical resistance that might cause some problems. Okay, so let me just figure it out. Where is the next nice technical resistance? So we got one level here. 104.67, so this is the red one. We got one level here, which is 104.82, and this is just above the cross of the 100 and 200 period moving average. So again, there will be a pressure. There will be a pressure from the base not to break above this level. Local intraday high is located at 104.20, which is fine, but this bounce from the extremely oversold market conditions on a daily is not really that big. Big pressure here around 104.25, 104.46, 104.68, 104.82. Big wall, strong wall of the supply. So horizontal technical resistance, cross of the moving averages doesn't look quite good for the US dollar index. So if there is a breakout to the upside above all of these levels, that means USD bulls are strong and the euro dollar will plummet to the downside. So please keep an eye on the situation here. It looks like this is duo or to be or not to be for the US dollar index, because 61% retracement is fine, bounce is fine. Now what do we do next? Do we break into the positive territory, or we stay on this level and continue to the downside? And this is very negative for the US dollar. So please, again, remember, non-farm payrolls Friday, data release 2:30. Volatility might increase substantially, so stay focused and stay on your toes during the news release. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.